Want to break away for a moment, get the results of that 30-year bond auction top of the hour. A little bit of an echo of yesterday. It's sending yields higher across the board. Rick Santelli, what happened?
It's a big echo to yesterday. I'll tell you what happened. Back-to-back 3 basis point tails. Not good. That's a pricing phrase, which means higher yield means lower prices. And the yield for the when issued market, well, it's significantly higher than where the lower than where the market clears. So this auction came in at 4.314, 3 basis points higher than the when issued market, which is trading basically 4.284. That tailing means pricing was on the soft side. That's the biggest reason I gave it a D as in dog. An even worse auction than yesterday's D plus and 10s. What do they have in common? They're first runs, meaning they're not reopened issues. We'll reopen these issues today and yesterday's 10 and 30 2 more times. And those become actually a little less aggressive sometimes. So the primary auction counts the most. Very weak on long-dated maturities. And I think that if you look at the intraday of 30s, intraday of 10s, look at all yields, you could see they're moving to the upside. And it isn't only because the auction wasn't good, it's because it was the last auction and 2 out of 3 weren't good. So $125 billion in supply for the refunding is done. And very quickly, I told you the yield and the grade, but I'll hit some of the biggest metrics on the direct bidders, okay, pension funds, hedge funds, they were at 15.5%. That's the lowest participation since February of this year. Dealers, they took a big amount because investors didn't take an aggressive big chunk, 19.2%. That's the biggest chunk primary dealers were left with on the buffet table since November of last year. Now, it doesn't mean that every auction is going to be poor, and this doesn't mean that yields only can go up, but this gives us a sense of after Monday's rout, it seems as though the buyers are scarce for the long maturities, mostly in view of what Steve was talking about. Politics, it's an election year, and believe me, debt deficits and servicing debt at $1 trillion is going to be an ongoing story. So the focus of that political camera is going to be on debt, and that's why these auctions matter.
Indeed. At least stocks are holding up better this time around. Yesterday, we immediately saw the Dow give up about a 500-point gain, and today it's still hanging on to its rally. Rick, for now, thanks.
Good news is good news today. I think that's what it is. Okay, jobless claims, the revision was at 250, but they came in lower. All the yields popped. Equities are in the green, and I think today, as yields move up, it isn't necessarily a poison pill for stocks, at least not today.
It's a great point, and also a reminder, Rick, thank you, that if we start having weak economy and all of a sudden the fiscal worries come to it's kind of like a double whammy, but when we're still growing, everything's hunky-dory. Rick, we appreciate it, Rick Santelli.